Good afternoon, everyone. So today's topic, I'm going to talk about order flow. Bit of a different definition to what you're used to in this group, but I believe it's probably the most important skill I have in terms of the ability to get into scalp trades and the ability to read the market and the ability to, make money where I haven't particularly got the best setup, but I still got high confidence in a scalp, you know what I mean? So like I can take those cheeky scalps, and I'm not recommending that at all. Not at all. But what I am going to teach you is the core concepts and the foundational idea that I used in order to do this and the ability to do it. So the core concept of this is if we are truly bullish, we will do the following. We will bounce some bullish gaps, we will invert bearish gaps, we'll sweep lows, and we'll push above highs. Okay? So forget about market structure for a minute. Just think about a trending market or a market that is in a bullish phase. Think about it in terms of holding bullish gaps, okay? And if we're in a bearish phase, then we're expecting bearish gaps to reject, we're expecting bullish gaps to invert, we're expecting highs to be swept, and we're expecting to push below lows, okay? Now, when that fails, or when we fail to do so, what might that be telling us? Well, obviously we remain bullish or bearish so long as the internal liquidity or gap holds. Once that closes beyond or inverts, it is no longer displaying that characteristic. Therefore, we can no longer be confident of continuation of the bullish or bearish order flow. So in this example, you see there's a market structure shift and bearish inversions followed by a retrace into a bearish gap. So here's just a little example. So at this side here, see if I can pull this in to here. Yes. So on this side, you can see here is a bullish phase in the market. Okay, we're bouncing from bullish gaps, we're sweeping lows, we're displacing above highs or pushing above highs. Displacing is just a fancy word of saying push. You know, when the market's pushing with force, like this is technically displacement. You can see it pushing with force. This is definitely displacement, pushing with force. Okay, that's all that means. So you can see this is clearly a bullish market. We're holding bullish gaps, all right? So when we fail to do so, what we have here is a potential phase shift, okay? So we're going from a bullish phase into a bearish phase, okay? Now, once we get that potential bearish shift, then what will we be looking for? Well, if we suspect that we are now entering into a bearish phase, what are we going to do? Well, we're simply going to look for bearish gaps to hold. We're going to look for highs to be swept. And we're going to look for displacement or pushing below lows. And we're going to look for inverting bullish gaps, okay? So you can define a market, whether it's bullish or bearish, purely by just recognizing how are we reacting from internal liquidity, okay? Because as you know, the market moves from internal to external, okay? That's always going on. It goes internal to external, it goes external to internal, it goes internal to external, okay? That's how markets move in terms of liquidity, okay? So we'll just chuck this back on. Where's it gone? There it is. So identifying these phase shifts. Let me see if I can put this full screen. F11? Yeah. So here's the trickier part of reading order flow. Identifying the phase shifts. When the market has decided to change from a bearish or bullish delivery. Okay, so when it's changing state. Hold on one sec. So phase shifts occur from external liquidity. Generally speaking, they do. So, you know, when we take this high, like you can see this down here. So phase shifts occur from external liquidity. Trading from these levels can be a lot trickier than trading from internal to external, as the trade management has you have to be a lot more disciplined on the trade management. The problem with this is you're generally going against the flow of the market. Therefore, the probability of a runner is diminished. As we know, everybody in here is obviously the part of this Bitcoin pump. If you're just the guy who wants to short every single top, you're going against the flow of the market. and it's a lot more stressful, and you have to go and find internal targets, okay? Whereas the guy who's trading internal to external, he's got a much easier time. He's going with the flow of the market, okay? So you have to be a lot more disciplined, and the probability of your runners is heavily diminished. So you need to cut your trades from an internal array of liquidity, order blocks, pointer controls, volume areas, breaker blocks, whatever. Okay, so you have to have that discipline, and you have to cut them sooner, right? So the best way to get in on these is utilize my teachings in my previous educational, which was entry models. Okay, so you can see here, this was literally the top of the current Bitcoin market. So this is what we traded. You can see that there is that general accumulation, manipulation, and then you get that distribution. You get that change in state of delivery. Okay, there's real intention in that move. Okay, we can clearly see that intention in the market, the change in state of delivery. All right, so this is clearly a bullish market, right? And then this is where we get that phase shift. Okay, so when we get that phase shift, right, when we have that really nice phase shift, given we are to proceed bearish and not bullish, what is the expectation of the market? The expectation is that bearish gaps will hold and bullish gaps will not. Okay, so once we've entered into a potential phase shift, and we have suspected the phase, we've gone from bullish to bearish, we then need to see bearish gaps holding. Okay, it's that simple. So let's use a little bit more of other tools to find context and value. So when trading, like I said, I prefer to, when trading internal to external, we want favorable value for trades. We want to buy low and sell high. Okay, so we can simply do that with a fib. All right, so if you look at this diagram, you can see there's a fib pulled from bottom to top. Once we're below the 50%, it now becomes a discount. Once we're above the 50%, it's obviously premium. Okay, so premium for shorts, discount for longs. Or if you're using volume profiles, you can use value area low or value area high. Okay, we're hunting for value. Okay, by the way, I like to use impulse volume profiles. So I literally just draw my volume profile from the low to the high of an impulse, and I stop it there. I don't extend it. I personally really like this way of using volume profiles, because what I'm doing is I'm essentially using the same principles as premium and discount. I'm just trying to find where within this range, or where within this swing range, are prices expensive and where are they less expensive. So the value area low is down in the discount, the value area high is up in the premium. Okay, it's high value and it's low value. Okay, so when trading from internal liquidity, we're looking for value. All right, so market structure also helps us determine a bullish or bearish swing range in which we can derive value. I typically look for 4-hour and 15-minute swing ranges. Okay, now going with the flow. So like I nearly said before, I prefer to trade from internal to external, and I believe it's a lot more favorable. The beauty of trading internal to external is that you're far more likely to catch a runner. Okay, so just look at this diagram. Let's see if I can pull it out as well. Okay, so what have we got here? In fact, I've got it on the chart. I'll just go get it. It's here. Okay. So what are we looking at here? Bullish internal liquidity has been formed. You can see we've pumped. Okay, we've broken all this structure. This is a bullish swing range. Okay, nice and simple. Prices retraced into an area of low value. Okay, so if we want to buy, we're buying at lower prices. Okay, that's perfect. This is a 1-hour gap. Okay, 1-hour gap. Nice, big, clear, obvious 1-hour gap. We want to trade internal to external. Okay, we want to go with the flow of the market, right? Now, what we're able to do is we're able to utilize multi-time frames. Okay, so this is one of the things that can be a little bit tricky for people, but by practicing utilizing multi-time frame analysis for looking for the most obvious singular gap, like this is going to help you so much, because you're able to use like a 1-hour internal liquidity and then jump down onto the lower time frame. So I've got 15 minute as an example here. You can see that what have we got? Even if we go to the 5, it's probably still super clear. So you've got this sort of pattern that we're looking for. You've got this accumulation, manipulation, sort of distribution pattern. Okay, this kind of look. This isn't a particularly clean one, but this is the kind of look that we were always looking for. Or this signature in price. This is what I discussed primarily in the entry models episode or module last week or the week before. So what we're looking for once we reach these zones where we want to do business is we're looking for the order flow. We're looking for that price action on a lower time frame to also shift. Okay, so this is where multi-time frame analysis can be a little bit tricky, but it's really, really powerful. So what you've got here is a bullish bias in this zone, but on the lower time frames, you still haven't had that phase shift. You're still respecting bearish gaps. Okay, so here when you get that real disrespect of a bearish gap and you get some bullish price action like that, and then you start respecting bullish gaps, this is a sign to you that the market is ready to start that next move up, and you've got this alignment with the lower time frames and the higher time frames. Okay, now you've seen me literally map out this exact kind of structure with like altcoins and things like that. One of my memories, I've got Tau. You know, you're looking for that internal to external on a higher time frame. Then all you've got to do is go down onto the lower time frames and find alignment. So you need that lower time frame alignment, and then once you've got that, you can trade to your target, and you can see the benefit of doing this. You potentially caught a runner to another all-time high. This here is a 4-hour gap. Let me just get rid of all this. Here is a 4-hour gap. Okay, so at this point you could easily just trade internal to external. Okay, now it isn't until we actually lose that gap does this larger time frame. You can see right now, if I just take this piece here, ever since this point here where you disrespect that and you enter into a bullish phase, all bullish gaps have pretty much been getting held. You can see this, not very many there, but that one there. So you're just going internal to external. You're bullish so long as bullish gaps are holding. Okay, so yeah, we got that lower time frame entry, we caught this phase shift, but let's say we didn't. Okay, what happens next? We eventually lose that. Okay, so once we've lost this 4-hour bullish gap, do we still think we're in a bullish phase in the market? Well, not really, no. We have a suspected phase shift where we're now entering into a bearish phase because we've had this 4-hour inversion, so we expect this external low. Because remember, the way we look at a swing range, or the way we look at internal, external liquidity, is you have your external highs and you have your internal liquidity. Okay, let's say this is a bullish gap. Okay, as long as you hold that bullish gap, you expect the external high. If you lose the bullish gap, okay, and you close below and you invert it, you expect the external low. Okay, this is the beautiful thing about internal liquidity. It can tell you the direction of the market before any structure is broken. That's why market structures traders get left by the side so much, and it was like that for me. Often they'll get left behind because they're waiting for structural breaks, whereas the liquidity trader, who understands the rotation from internal to external and understands with the basic concept of inversions, they're able to predict the structural break. Okay, so there's your 4-hour break there, inverted, bang, immediately second candle gone. Really nice. Right, so that's going with the flow. Key point here is you need to practice utilizing multi-time frame analysis. So if you've got a higher time frame bias or a higher time frame idea and you're going with that internal to external rotation, you're going with the flow of the market, it all comes down to the lower time frame alignment. Okay, you need the lower time frames to tell you, right, okay, we're ready to go. You know what I mean? Because it's like with Bitcoin right now, like we're dumping hard, so we're still in a bearish phase, but the lower time frames may now be starting to shift bullish. You know what I mean? So when they shift bullish, they may enter a zone where we say, right, okay, well now we're interested in shorting again because we're now in a place of high value. Okay, and then if the order flow begins to shift bearish again, that starts to confirm that idea to us. Do you get what I mean? Okay, I'll answer questions in a second, Swift. So I'll illustrate this myself, but for scalping, so What if you want to try and catch on to a trend, or you have a major draw on liquidity and a retrace into an area of value might not be on the cards? All right, so you're not getting those retraces into premium if you're looking for short, so you're not getting those retraces into discount if you're looking for longs. Okay, let's say the market was really, really impulsive. Well, we can utilize order flow and the concept of phases to get us in on the action. This is something I would only recommend for those who are more accustomed to these methods and have put numerous hours slash sessions into trading them live. After all, live trading is the best practice for actually becoming a good trader. Do the thing. Okay, I mentioned that in my philosophy module. So here it is critical you're able to read the environment and utilize the concepts of order flow, looking for delivery from internal liquidity and entering with lower time frame confirmations. When doing this kind of trading, I have one major rule, okay, and it's one that I utilized just now on NQ. Aggressive trades deserve aggressive risk management. I'll say it again. Aggressive trades deserve aggressive risk management. So what does that mean? Like you must utilize tight stops and you must utilize low time frame entry models and be quick with them break evens and then trail stops. Okay, you're going to be quick and you want to do it early. All right, aggressive trades deserve aggressive risk management. Don't sleep on like premium longs and discount shorts, basically. Right, so let's get back to the chart here. So an example of this is you've got the move that we had the other day where me and Spitty caught that little high here, and it only got as far as the 382. So if we draw this, sorry, excuse me. So if we draw this as a swing range, you've got obvious this is the premium, this is where we want to do business. So let's just say, forget all the rest of it for now. Let's just say we're looking for shorts in this premium pricing, okay? This is where we want to do short business, right? But price doesn't do that, it just comes to the 382, right? If you've got the ability to read price action, read the order flow, you can still find bearish or shorts basically. So you've got multiple lower time frame internal liquidity here. There's one there. I think there's a 4 hour up here as well. Yeah, so that was our big 4 hour. So you've got this big 4 hour internal liquidity there. So even though you haven't come to the premium, you could still be expecting that internal to external. Now, once that is hit, it just then becomes a case of looking for the obvious lower time frame gaps to get inverted to give you that sign. Okay. So right there, you've now lost this bullish gap here. So you've started to get that lower time frame alignment, the 4 hour idea. Okay, so you don't necessarily have to wait for price to reach all areas of mega value. Sometimes you can get in before that area. You can utilize that, but you need to be quicker on your risk management and you need to make sure that you're trailing stops. Okay, aggressive trades deserve aggressive risk management. So, any questions? I'll illustrate this a little bit more as well while you get your questions in. So, Right. So, first question. Swift. Which time frame do you find the most important? I mean, looking for a 4 hour, but confirm it with a 15 minute. Right, mate. So, I get this question a lot, and I want you to forget about the time frame. All right. I want you to forget what the interval is. What I want you to do is focus on finding single obvious gaps. Okay. Look back in my inversions module. Look back in my on my videos and things like that. Like, the most important thing is finding that single obvious gap. Okay. Doesn't matter if it's on the 1 minute, the 2 minute, the 3 minute, the 30 second, 5 minute. It doesn't matter. Okay. I primarily use 4 hour and 15 minute as like a swing range because they're nice intraday levels. Okay, nice intraday intervals, because I can look at it from a day trading perspective. It's very, very rare that I do any swing trading, only really with like crypto. Okay. But the most important thing is always going to be finding the single gap. Okay, utilizing multiple time frames in order to find the clearer picture. All right. Right. Blue fonts. Do you consider the bearish order flow has changed with the huge buyback we are witnessing today, since we are inverting every bearish gap? Yes, on a lower time frame, the bearish order flow, well, it's like, I've been trying to think of I've been trying to actually create this as a tweet or even a module. It's like, the market has this weird sort of like superposition. Okay, so like superposition in quantum mechanics is like one thing can be in two states at the same time, kind of thing. So like the market has this really cool sort of like superposition where we can be bearish, but we can also be bullish at the exact same time. Okay, it just depends what view you're looking at it from, or what perspective you're looking at it from. All right, so it's all relative. So from a daily perspective, we're bearish. You know, from a 30-minute, 15-minute perspective, we're bullish. Okay, so it's about finding the value and about finding, you know, a value essentially. So let's have a look at the actual chart. That was Nas. Did I copy and paste that? Right, let me just pull that into my thing. 1 second. I swear, every time I do one of these calls, somebody just wants me to talk about the current PA so they can get a signal. Right, so yes, from a lower time frame perspective, we are indeed bullish, because look at this. We're moving with force. We're inverting bearish gaps. We're holding bullish gaps, but we're moving quite aggressively where we're not really back testing any of the gaps that we're making. So if we look at the 15-minute, you can see that we're not really testing back into anything. We are here. You can see that there. Well, it's kind of crazy. We're moving with a bit of force, which is interesting. Okay, so on the 15-minute, we're pumping. But like, if we look at like the 4 hour, bearish gaps are holding. Okay, this is a bearish gap here. So let's see what happens when we get to this 4 hour bearish gap. All right, 4 hour for me is a very important time frame. So I want to see this get above, and then that would tell me that, right, okay, this 4 hours showing me a bearish state. Now the 4 hours beginning to shift bullish. Okay, I suppose on the daily we are, you know, we're just coming down into this liquidity. You know, we've got this naked weekly gap down here. So I really like this naked weekly gap. I would like to go and explore that. Daily wise, you can see that we're breaking these bullish gaps. You're not really holding anything anymore. I mean, this one I wouldn't really count. It's very, very washed. It's been used quite a lot. I believe, do we have a 4 hour down here? No, we did invert that and we immediately pumped back. So it's a little bit messy down here. So I'm always just looking for that clear picture. So for me, right now, this is probably the most important gap on the chart. I want to see how we react from this. Okay, so because if we react from this and we continue down and we go internal to external, okay, I know that I'm still in a bearish market. Okay, therefore I'm expecting lower. I'm expecting these external lows. I've got this big draw on liquidity down here. All right, but if price comes up and closes above there, That then tells me that this is actually starting to show some bullish price action, okay? So if I get that 4-hour inversion, I can get in on a lower time frame alignment and look to trade with that, okay? So by just using simple gaps, you're able to determine where price is likely headed next, all right? And then once you determine that, you go on down onto the lower time frames and you look for that order flow that aligns that idea. So if I think price is going up, I need lower time frame bullish order flow. And if that isn't happening, I don't have a trade. Any more questions? So up or down? Currently down. How nice is this, by the way? So have you seen my key zones module? Look where we bounced from. Boom. Would you consider the current 1 hour gap important? Yes and no, because even if we do invert that, the only place I think this is necessarily going to go is into this next internal liquidity. For me, I'm looking at this as more of, here's my major swing range right now. Here's my 4-hour swing range, okay? Here's the internal liquidity. Here's the external high, the external low. Okay, so this to me is the most important gap on the chart because this determines whether I think we go to here or whether we go down to here. Okay, so all of this at the minute is just kind of noise. This is a naked 4-hour gap, okay? It's not discount, so it's not low-hanging fruit. Let me just confirm that. Yeah, so it's in the premium, so it's not low-hanging fruit, so I don't necessarily think that it's the most attractive draw on liquidity, but it's still a draw on liquidity. It's still a naked 4-hour gap, okay? And the market will seek to rebalance inefficiencies, so therefore it wouldn't shock me at all if we went up to here. So if we got that 1-hour inversion like you talked about, I think there's a good chance we do go to this 4-hour, but I'm much more interested in what happens there. Okay. Right, so Spitty says, so my main takeaway from this, if price is respecting bullish gaps and bouncing, then the market remains bullish until the major resistance level. Flip this for bearish PA. Yeah, so from a low time frame trend play, if price action is respecting bullish gaps, then we zoom in to try and participate with said trend. Exactly. So, like this illustration that I've just done, let me get it up. So here, let's say this was like a 5-minute time frame. Okay, this is a 5-minute bullish gap, and it's well within the premium. And let's say you've got like a naked 1 hour or a naked daily or a wickless candle above. Okay, you've got some form of draw on liquidity. I've done a whole module on it, so go and watch it if you don't know what that is. Right? Let's say you've got a really bullish market and you just want to get in, you just want to participate. I don't recommend doing this kind of thing, but if you're advanced, then it is possible. All right, this is much more of a scalper's mindset, and not really like a particular thought out model. But yeah, exactly. If this is a low time frame trend, you don't necessarily have to wait for good value or low value. You could look for those lower time frame inversions. So let's say this is a 5-minute gap, and then there's a nice single obvious gap on the 30-second or the 1 minute. Play that inversion. Nice tight invalidation. Price takes the high. Aggressive trades deserve aggressive risk management. Hit break even at the high and potentially catch that runner. Go with the flow of the market. This is the beauty of trading internal to external. Okay, I trade like this pretty much when I do my 4-hour strategy, which I'm gonna build out a little bit more so I can teach it more effectively and make it super simple. But I've got a whole strategy around 4-hour, and I take trades like this when I at a specific time. So, and they usually accompany, more than likely they accompany with draw on liquidity. So yeah, looks but you're learning. Wow. Nah, you're a TA encyclopedia. You'll be better than this. You'll be better at this than me soon. See, everybody wants advice on the current PA. We're doing a stream later. So if price is unable to close above the 1 hour gap and you see a reversal on a lower time frame, would you consider shorting? Yes and no. No, because I'm already short from higher and I'm in no rush to short anymore. Yes, technically it's a good scalp because it fits the bill. You're in premium pricing. Okay, so let's just say this was your scenario here. Let's just say you were calling it this as your swing range. This is your 15-minute swing range. Okay, so let's just play this. You've got a 1 hour gap that failed to get beyond, and then you start losing bullish gaps. Okay, so you start closing below bullish gaps. This would tell you that this has acted as resistance. This bearish gap is held, so you're still in a bearish state on the 1 hour. Then if the lower time frames or the 5 minute, all that kind of stuff, they start showing bearish signs, you're potentially in with a nice scalp here from a bearish internal liquidity, internal to external. Okay? So when you're evaluating order flow, you're always looking at where am I coming from and what was the reaction out of there. Okay? Love to hear that. Right, any more questions? Because we're approaching the 40-minute mark and I want to make sure this is nice and tight for everybody who watches it back. Anybody else? Okay, well, there is a Q&A section. Of course, utilize it or message me within one of the chats. It'd be better if you put it in the Q&A section because then other people can learn from it easily. But yeah, thanks for watching. I'll see you all at 7 PM for Chartmas. See you later.